Following video was originally published on Smaulgld.com on Saturday, June 22nd, 2019. Hello and welcome to another Smaulgld BitChute recording. Today is Saturday the 22nd of June 2019 and it is Saturday Silver with Smaulgld. On Saturdays we discuss only silver. Sundays we discuss gold on Solid Gold Sunday with Smaulgld, and on Fridays we discuss cryptocurrencies with Crypto Friday with Smaulgld. Well, today we're going to take a look at the silver price the last couple of weeks, the last couple of years. We're going to take a look at the gold silver ratio. We're going to discuss a bullish case for silver, and then we're also going to head on over to Comex and check out the commitment of traders. And also something we haven't done, we've looked at the amounts of silver held in the Comex warehouses, the Comex approved warehouses. And we've looked at owners per ounces, but we haven't looked at the actual delivery numbers. We're going to take a look at the delivery, the amount of silver that is delivered on the Comex pursuant to all those contracts, and they're going to compare it to U.S. Mint sales and to Indian sales. So let's get right into the price. Now, the price of silver yesterday on Friday was down. It was a big day for alternative assets yesterday. Lots of concerns about Iran. We came supposedly with Donald Trump pretty close to launching some type of military strike on Iran. Didn't happen. Gold reacted well to that. Bitcoin, Litecoin, the cryptos moved higher. The stock market went down a bit, although not really down much at all. The Dow Jones, NASDAQ, S&P 500 all down less than 0.25%. But silver surprisingly was down about 10 cents yesterday, while gold was up about $12. Well, let's take a look now what's happening with silver. Now, this all ties into what I've been saying about the differences between the price of gold and silver. Many people think that silver is just simply a gold substitute. Nothing could be further from the truth. They do share a monetary history. We've discussed that many times, but we also know that in recent years, silver has been completely demonetized, while silver remains completely demonetized, but gold has not. Gold is purchased by central banks. Gold is held by central banks, and gold's demand profile is heavily skewed towards investment and jewelry. Part of that demand can also be considered investment, whereas the silver demand for investment is under 15%, meaning that it is largely valued as a commodity, a useful commodity nonetheless, but the purpose of silver is not for the majority of the purchasers to stack and to hoard it, and it's certainly not to use it as a currency. And that is why I believe that silver does not have a premium on it right now. The latent premium would be if there was some type of EMP, some type of situation where silver had to be used as a currency, then obviously that currency value would come back into play. It's a perfect medium of exchange when you can't conduct transactions, but given that no one does conduct transactions in silver right now, it doesn't have that premium. And then as a stackable investable asset, well, you may think that it's a good thing to have and you like to stack silver. The worldwide global demand for investment silver is, as we mentioned, as a percentage of silver's overall demand is under 15%. And that explains to me the difference in price. So here's a year-long price here we're looking at. Silver on the year is down about 8%. When I say on the year, I mean the 12-month period. And if you take a look at silver on a 10-year period, you see that big spike that occurred in 2011, and then it's been downhill ever since. Now compare that to gold, which I don't think we should even compare gold and silver. I think where gold becomes relevant to silver is when silver gets valued for its monetary component, meaning that people rush into silver because they believe that there is either a need for it as a currency or a need for it to protect against calamities. Now, the last 5-10 years, if there's been a hint or a whiff of calamity or inflation, that money flows into gold. Now look, yesterday we saw silver down 10 cents, but gold was up $10. That's very significant. They're heading in different directions. And it's not just yesterday. We see gold over the last year. We saw silver's down about 8%. Gold is up 9%. You know, you're heading in the exact opposite direction there. If gold and silver were identical, except that silver was just the cheap gold, then they would move up relatively in lockstep. They don't, because silver has an entirely different demand profile. Now, the bullish case for silver, as we're going to get to, is when that silver monetary component gets valued, and generally, in my opinion, it's not investment advice, is that silver investment component will be valued higher the higher gold goes. Silver's not going to lead gold into any type of monetary revival. That's your 1 year. Now look at your 10-year. It's not that bad. Yes, you had a peak in 2011 and it went down, but you can see, it's now bounced above the 1350, 1375 level, and is currently sitting at 1399. It did hit over $1,400 on Thursday. I think it got to 1410. Now, while it's not ideal that the price went to from 1900 to 14, that's not the end of the world there. Whereas the silver price has fallen, has stayed down. Let's take a look at your gold-silver ratio. And here's your 10-year gold-silver ratio. It's been apparent to me, and you can see this is ever since the peak in 2011, the gold-silver ratio is essentially headed straight higher, and yet many of your silver pumpers, silver channels, insisted in this entire period since 2011 that the gold-silver ratio was unsustainable, and you'll see, and it's the smoke and buy of the century and so on, and it hasn't been. And all during this time, instead of reevaluating it comes out of the ground at 16-1, or it's unsustainable, or historically this, or whatever justification they had to make those calls, they never reevaluated them. So for 10 years, somehow the market doesn't understand why they think the gold-silver ratio is unsustainable. Well, a few years back, maybe 4 years ago, 5 years ago, back in 2015, I started to reevaluate it. And I started to realize that perhaps there's other reasons for the gold-silver ratio to go higher. And I came upon the idea that the gold-silver ratio was 16-1 and 15-1 because in the 19th century, the U.S. government set it at that rate because they wanted to have a bimetallic standard. But ever since 1873, it's been a slow decline in silver being a monetary metal. It was completely demonetized by 1968 when they got rid of the silver certificates. And the other thing is that when the price was set at 16-1, obviously it was 16-1, but then from 1934 to 1974, even though the gold-silver ratio had fallen below 50 and at some points in the 20s, that was because the gold price was not allowed to go higher. It was fixed by Congress in 1934, and it stayed there. And Americans weren't allowed to buy gold. So gold's price was fixed. That's the only reason the gold-silver ratio was lower. But ever since 1975, when they freed gold up, they got rid of the Bretton Woods Agreement, it became a commodity that people, individuals in the U.S. can buy. Central banks would buy it, but it wasn't part of the financial system officially, but still central banks decided they wanted to hold it despite the fact that the U.S. had breached the Bretton Woods Agreement. Then the gold price took off. Silver took off also in 1980, and it also took off in 2011, but it does not hold the same staying power that gold does, as you can see by this chart. Now, I do think that silver will eventually, if gold, as I mentioned at the beginning of the year, if you go back to the very beginning of the year when I gave which I never do, I give predictions, it's just for fun, in the beginning of the year, I said if gold got over 1500, that silver would eventually follow, and that you could see a close over $20 for silver. And my silver prediction was based on the idea that silver would eventually get a premium on its small monetary component if gold got a bid. And it looks like that's possible, that gold is getting that monetary bid, that safe haven bid, in which case, if that goes higher and higher, traditionally, people then start to look at silver as a cheaper alternative. But during the time when it's a cheaper alternative and gold is flat, the people would rather hold the gold because the gold is going to at least stay flat and the silver might lose some value. All right, now let's move over to the Comex and see what's going on there. I want to look at the silver in the Comex warehouse. This is another fake silver story, along with JP Morgan buying silver, that somehow these are things that are going to drive silver higher. They're not even true. A Comex default is the other one. There is no Comex default. It's not going to happen. There's 304 million ounces. There's some people who say you can't trust those numbers. Okay, well then don't trust the 150 million ounces that JP Morgan says it has in its vault. I mean, you could just make up stuff because you want to believe silver set to skyrocket. It's not going to skyrocket because of a Comex default or because of anything JP Morgan does or does not do. There's no evidence that JP Morgan has any silver whatsoever. Now, if you look at this, there's 304 million ounces in the Comex warehouses, which include JP Morgan, Coins and Things, CNN, Brinks, Delaware Depository, HSBC, and Scotia Makata. They're the ones who have their silver, and you can see this 204 million ounces. That's a lot of silver. That backs the contracts. Now you say, well, it's fractional reserve and it's a fraud. Well, if you understand what Comex is, most of the traders there are to trade for price. Some of them are bullion dealers. They're just hedging their inventory. There's plenty of silver to back the contracts. Now, it's not one-to-one, but it doesn't need to be one-to-one, just as there's not a one-to-one correspondence of dollars, even in your bank. I'm sure there's even less. I'm sure in your branch bank there might be millions of dollars of deposits, and there's probably at any given point only a few $1,000s in the bank. However, in the Comex warehouses, if you take that 300 million plus ounces, you put it up against the contracts that are trading, and you can see there's about a billion ounces worth of contracts being traded at the moment, but that comes down to about 3.8 ounces per contract. So it's not one-to-one, but it's not some ridiculous amount where you're going to have some type of collapse because someone's going to stand for delivery. Remember, if you're interested in buying silver, you don't go on you can go on Comex, you can hedge your position for a period with the intention you're going to stand for delivery, and you'll get your silver. But for most traders, they're there to trade the fiat price, and it's nice if they need to have some physical delivery. But generally, if somebody wants physical delivery of silver, they're not going to trade Comex contracts. They're going to go on the over-the-counter exchange and negotiate a silver purchase, or if they want lesser amounts, they can go to SD Bullion, APMEX, Golden Eagle Coin. They can go and they can buy silver. So the idea that somehow that these traders are being ripped off and they don't know any better, nonsense. They know exactly what's going on. They're trading paper contracts. They're trading for the price. And if they want the silver, there's plenty of silver there for them to get. You say, well, okay, well, how much silver does actually get delivered? Well, let's take a look at that. It's not insignificant, but it's far less than is required to meet demand. This chart shows you Comex silver deliveries. These are charts from Nick Laird, Gold Charts Are Us. And you can see in a given month, they might trade 5, 10, 15 million ounces that actually get delivered. So it's not insignificant. It's harder to tell in that chart. But let's look at the annual charts here. And you can see 2018, 185 million ounces of silver were delivered. That's a pretty decent amount. That's more than has been traded in the last 12 years or has been delivered. But also, if you remember, very briefly, if we go back and look at how much silver is actually in the warehouses, well, they're able to deliver those amounts because there's more silver in the warehouses. So you can see 300 million plus ounces. There's silver going in and out of there all the time. But you can see now we go back to our Comex silver deliveries. In some years, it can be as low as 49 million and as high as, it looks like, under 200 million. So if you take a look at that chart, it's a decent amount. So it's not like Comex is some type of fraud where you can't get silver. You can see there's a decent amount, a relatively substantial amount of silver that does get delivered pursuant to the contracts. There's also a substantial amount of silver in those Comex warehouses. But let's compare that. So 185 million, I believe, was the largest amount last year delivered, down to 40 million in 2011. Well, what is that? How does that compare to, say, American Silver Eagle sales? In 2011, there were about 39 million ounces delivered, so to speak, sold in American Silver Eagle coins, and there are about 40 million ounces of silver delivered on the Comex. But if you look in 2018, only 15 million ounces of silver, or 15.7 million Silver Eagles were sold, but the institutions, the ones trading, they purchased, you can view that as a purchase if you close out your contracts and take delivery, about 185 million. It's a decent amount and shows that silver trades hands on the Comex. The bulk of the trading is not physical, but there is a physical component, and it's relatively large. I'll just show you another chart here. No, you don't want to see it. That's just a monthly chart of American Silver Eagle sales. You want to see this one, Indian silver imports. Now, that's a much bigger amount. Here you're talking about tons, 7,000 tons. You're talking hundreds of millions of ounces of silver going into India. So while the Comex silver demand is, physical demand is large, there's also a large stockpile, but it's the Indian silver demand which is much bigger. All right, let's take a look now. I think we're done with Comex. Now we want to see, we want to take a look at the commitment of traders. This is something we look at from time to time. The blues are the net number of commercial traders. They're almost always short silver on a net basis. Not every commercial trader is short, but if you've got 40 or 50 of them, the majority of them are net short, and the non-commercials are net long, and that's the red and the blues at the bottom. And you can see right now it's basically back to normal as the price has risen a bit. You see to the far right, you can see the price going up, and that's when the commercials start laying their shorts on. You can see the blue line in the middle box heading down, and that generally just follows. And if you have rising prices for a long period of time, then the blues will grow, and then the reverse is true. When the price drops, eventually the blues got to close out their short positions, and at some point they may even go long, and they have done so. They did back in, looks like, the end of last year, and almost, you can see the blue just above the line. They almost did it last month, but they didn't because we reversed the decline. You can see that decline in the price of silver to the far right of the chart, the upper right chart. But since we started moving higher again, the commercials have laid on their short. So it's just a yin-yang that goes on and back and forth. And you can't read anything into it because it actually follows a logic. If the price drops for a long period of time, eventually the commercial shorts will go long. You generally don't get long periods of this consistent decline like you see there in the middle of the chart where you just have that drop. That's the only reason the commercials went long. It doesn't mean game over, game changer. Somehow there's commercials of realized at JP Morgan, whatever nonsense you hear. It's insignificant. It means nothing. It's what you would expect them to do if the price drops for a long period of time, or if the price rises for a long period of time, the reverse will be true. But you can see normally you don't get price drops for 3 months in a row. It generally goes like crocodile teeth. It goes up and it goes down, it goes up and it goes down, and the trading follows that. But if the price just goes straight down for 3 months, well, then you're going to see a flipping in the long and short positions. All right, what else do we got for silver? I want to show you the ETFs. It's very interesting. We look at this from time to time, but the ETFs have really just filled up. It's interesting. The silver stockpiles, silver is being hoarded. I mean, you do have this fund, all the ETFs, about 600 million ounces, the Comex, 300 million ounces. You could say that's a good thing. Well, it could also be a bad thing because it means it's an overhang that if the price were to rise, that people could unload it because they've been storing it. But this is very different. As we'll see tomorrow when we do Solid Gold Sunday with Smaulgld, the gold ETFs inflows and outflows generally just follow the price of gold, whereas the silvers don't. You could see the silver price, that line that goes up and down, it doesn't really follow. They just keep stacking the silver. So it is not, it doesn't follow any price rationale. It just looks like people add to silver ETFs, they set and forget, and they leave it there. All right, let's see, what else do we have by way of silver. We've looked at the Silver Eagle sale. Oh, silver premiums before we let you go. The silver premiums on Eagles, I'd say they're still high. I mean, they're always going to be high when the price is low, and the reason for that is there's a $2 premium that the U.S. Mint charges no matter what the price is to authorized purchasers. So you're not going to get current year coins under $2. You're going to pay well over $2 because your bullion dealers, even if they're an authorized dealer, and I think only APMEX is one, the rest of them have to buy either from APMEX or other authorized dealers, they're going to mark them up. So when the price is low, $2 is a big deal. I mean, quick math, if the price of silver is $10, it's not, and you have to pay $2, you're paying a 20% premium. That's why when I believe when the price is low, you're better off with generic rounds, only because you get something closer to spot. Also, though, the flip side to that argument is that you do get some of your premium back when you go to sell. But I think the premium is very high as a percentage if you're paying that at least $2 over spot for current year dated Silver Eagle coins. One way around that is don't buy. If you don't want to buy generic silver, buy American Silver Eagles prior year dated, because generally you can get those at a lower price. And you could say, why can you get those for less than $2 over spot? Well, because the bullion dealers will be buying them back from other people and not paying them premium. Maybe they're paying them 50 cents or no premium, and then they can sell them to you for $1.50 or maybe $2 over spot. So current non-current year dated coins, Silver Eagle coins, are the better buy probably during a period of time when the price is low. And of course, some people do collect them by year. And if you do, it's probably a good time to find your missing years, if that's what you're interested in doing, is creating a Silver Eagle collection with every year. I think the last 10 years are probably very easy to get because there's no real premium, because they did make, if you look at a chart, we'll go back and take a look, you can see, I don't know, there probably isn't a big premium on anything after 2010, because they did make 2830. You could see you probably have no trouble getting a 2015. Now I understand that the 1996 one, they only made 3.5 million. Anything before the financial crisis, they're a bit rarer, so some people collect them. I believe they do have premiums on them. But I think when you get a special deal, when they say prior year dated American Silver Eagles, they're not going to give you a 96 or a 93 or a 1986. They're going to be dealing with 2012, 13, 14, 15, and those years. All right. Well, this is not a live broadcast. This is the first one I've done in a long time that hasn't been a live broadcast. We're putting this on BitChute. This may show up on YouTube. It may or may not, but this will be available for all Patreon subscribers, for all Smaulgld.com subscribers, and all Subscribestar subscribers. So thank you very much for listening. And tomorrow, join us for Solid Gold Sunday with Smaulgld. Thank you very much.